What's up, guys? It is Tuesday, March 7th, 2:38 p.m., and this is going to be a brief crypto update. We're going to cover the dollar, bond yields, Bitcoin, and maybe one other chart because I got to get going on a one-on-one right after this. So I wanted to get out an update. Woke up pretty late today. I went to WWE Raw, John Cena returns. That was last night, so I didn't get home real late. So definitely woke up late to a surprise with the dollar popping up as much as it did. So we're going to cover all that. Is it going to continue higher? Is it going to come down lower? We'll cover it. So let's start off. We got Bitcoin right here. We got the dollar. All right. So bond yields. Let's go to the 12-hour chart. Right now, we're starting to curl down, but we had like a little pop-up today. And that was because I guess the Federal Reserve, Jerome Powell, spoke today and the market didn't like it. 4-hour chart, we're seeing cross-ups. We're trying to pop up with this. Let's throw on the daily chart. Let's look at the Fibonacci retracement here from this top down to the bottom. Boom. Yep, we hit it once. Maybe we'll come up, do a little double top action, or maybe we'll come up and hit the 786 of this smaller move of this top down to this low. I'm going to grab that there to here, and that would be around 4.045%. So we have our clear levels. These two, we need to get rejected at them. We got to get rejected. If we get above, now we're breaking above the 786 of this whole entire macro move, where in October, we had set this high up here. And then where in January, we set this low. And then if we were to come up here and hit above the 786 and keep rallying, now you're seeing a huge kind of pump back up because of how we're literally tracking the 786 of this whole entire big move. We're talking about months. So if we get above the 786, we could start pressing up to levels that we don't want to see. Just like we tracking on the lower time frames and how quick price moves. If it breaks the 786, same thing as on the macro time frames as well. So bond yields, we need to see the momentum kick down. We do see the momentum down in the 12-hour. We just can't cross back up. We do see that we have divergence where we're doing lower highs, lower lows, but in the bond yields, we're doing higher highs, higher lows. Hopefully that will kick in here, and we want to see us break below those lows around 3.92%. Then likely, all right, it's set in stone. We're going to come down, retest these levels down here. Now let's go to the dollar. So the dollar had a knee-jerk reaction up today. Crazy. So if we were to look at the indicators down here, we're seeing a lot of momentum on the 4-hour. We're kicking up pretty hard. This candle closed in 18 minutes. So let's go to the 12-hour now, and we can see that we're right up pressing to this void lines. But look at what they're trying to do. They're trying to open up their mouths wide. And when they open up their mouths wide, that means a strong move is underway. We need to see this kind of get rejected ASAP and then have it curl back down. Maybe it's a fake break up to then a break back down, and then we really go. But yeah, we're at a critical level. We've been saying it, this 105.5 kind of like right here, being a strong resistance level or support and historically, and then right here as well too. So yeah, we're in the zone where we got to get rejected. Absolutely. And you can see when I zoom out and I hide these indicators here, just looking at the price action. And yeah, look, so we came up in May of 2022 resistance, and then in June of 2022 resistance, we got above it in July, came back down to retest it in August, support. Then we broke down in November 2022, came to it as support, broke down below, rejection, and then in January, rejection. Then up here in February, we got a little bit of a rejection. Now we came back down. We're right back up to it again. So this is the level that we got to see get rejected, or we're going to see a bigger kind of relief rally here. Maybe we could go up to 110. And even if we went up to 110, that's brutal. We don't want to even go up to 107. That's another key level. So where we're at right now, we need to see a rejection come in. We got a strong bounce off that 50 line. We wanted to see that break. We did not see it. So 6-hour chart, 4-hour chart showing momentum to the upside. We don't want those to spill over into the 12-hour where it crosses up and then us going another run. We want to see us get rejected around here. So the one day chart was so close to crossing down, you see, so close. And then boom, from today, we had that dark green come back in. We still haven't seen the stock RSI cross up though. So there still is hope for us to just roll back over here. We'll have the stock RSI continue down. We'll have the TSI come down and the MACD will turn red. And then this will roll over, break the 50 line. Then it will be set in stone. All right, the dollar is officially rolling over. But what a little fake out there, huh? So this is the level we got to get rejected. Set your alerts on it. It's like 105.80. Bitcoin right now, we were tracking this fractal from back over here in the video I did yesterday. I did like 8 videos. We were saying like we're in this area and that, okay, we could come back down, retest these levels, and then we go. That was one of the scenarios we lined up. And it seems like that's starting to be the case, but it's a matter of, are we going to go to the downside in a big way or find this area to bounce and go up in a big way? But as you can see, the 6-hour chart, right, with the signals, I like to use the Stargate signals to analyze fractals as well, too. And we had our sell come in, we came down on sideways, came down, went sideways. We got our buy now on the 6-hour, which was a fake out. We roll back down, buy now on the 6-hour, which was a fake out, roll back down. Then we had our buy warning here, went sideways, buy warning here, went sideways, had a little kind of rise up, buy now. And then we broke down to retest the lows like that. And then buy now, broke down to retest the lows like that. So I would say we're right at this point. We're right here compared to the past pattern in the fractal where like, all right, we got to start bouncing here pretty soon. And that will probably be a result of the dollar rolling over. But if the dollar presses up through here, then we know that we're not going to do the scenario that we did back here. It'll be more of a dump down scenario. So it's a very important moment we're at right now. We had said that this week we'll decide the month of March, which will decide the next 3 months. So definitely a key time to watch. So yeah, I would say we're at this moment. If you haven't seen that video from yesterday, it was the Bitcoin scenarios video. So watch that from yesterday. And yeah, so this moment we're at is very crucial. If we go to the 1-day chart, we look at the 200 moving average. That's sitting right here around 21,800. That's a key level as well. I would say if we broke that level, we close the body of the candle below it, things are starting to get more likely to the downside. But so far, we're doing all right. We just need to hold those key levels and we need to start seeing the dollar roll over. So then that can spill over into Bitcoin and the rest of the crypto market. So I'm going to leave it at that. A quick little update. We already know the market drivers as far as what if the bond yields are doing this and dollars doing that, then this is what Bitcoin's doing, which will ultimately tell you what the altcoins are doing at a more kind of at an extreme, because the altcoins move more at an extreme than Bitcoin. So definitely keep it on the radar, but we're going to find our answer here in the next 24 to 48 hours if it's going to be this scenario back here and then we go, or if it's going to be, we're going to go here in the next 24, 48 hours. It's a matter of if it's going to be this scenario or a dump down scenario. So keep your eyes on the chart, set your alerts, and I'll see you guys in the Discord.